Hello guys, today we are going to discuss what stock futures is and who should consider investing in stock futures. A stock futures is a contract that requires the seller to sell a specific stock at a specific price on or before a specific date. In simple terms, it's an agreement between the buyer and seller to buy or sell a stock at a predetermined price on a future date. The stock futures can be traded on the Chicago Mercantile Exchange, or the CME for short. The most actively traded stock futures are those based on the four major indexes, which are Dow Jones, NASDAQ, S&P 500, and Russell 2000. Each of these futures contracts represents 100 shares of the underlying index. So, if the price of the NASDAQ futures is $12,000 per contract, then each 100 shares of the NASDAQ is worth $12,000. There are many different stock futures contracts available, including those that expire on the same day, or those that expire months or even years into the future. Just like with options, stock futures are a leverage product, meaning that you can control a large number of shares with just one contract for a relatively small amount of money. For example, with only $5,000, you can control 10,000 shares of the NASDAQ 100. That's 10 times more than what you could buy outright. At the same time, because of this leverage, your potential losses can also be 10 times greater. It's very important to make sure that you fully understand the risks involved before trading futures. The best part about stock futures is that they can be used to make money in both bullish and bearish markets. If you believe that the market is going to go up, you can simply buy futures. If you believe that the market is going to go down, you can sell futures. Stock futures are very liquid and are generally less volatile than stock options. Now let's talk about who should consider investing in stock futures. First, you need to have a margin account. You can open a margin account with most brokerages. Second, you need to have at least $5,000 to invest. This is because each futures contract represents 100 shares of the underlying index. And most brokerages require that you have at least $5,000 in your account to trade futures. Third, you need to be willing to take on some risk. Futures are a leveraged product, meaning that your potential losses can be 10 times greater than your initial investment. If you're not comfortable with that, then futures may not be right for you. Subscribe to our channel for more videos like this.